Hello everyone, welcome to the weekly forecast on gold. So I've got a lot to explain in this video, so I'm going to make it as quick as possible. So last week we got this nice downwards move on gold over 1 to 15 risk to reward, but I'm not going to bang on about that. All the links are in your video description. Let's go to a fresh chart and we can just go over what is to come this week. So carrying on from last week's weekly forecast video, I was explaining on how this week is the last week before the Christmas period. So all the traders will be coming into the market this week, waiting for a critical news release and then positioning their positions for the Christmas period. And that's when you get the one directional move that goes over the Christmas period into the new year. So that is what we are preparing for today, and that's what this video will explain. So this is this week here. And what news do we have this week? We have interest rate news on Wednesday. There we go. In the afternoon. And then we have GDP on the Thursday. These are your two main events you are waiting for. Well, I am waiting for this week. Those will be my main trading times this week, because once I've got the data from them, then I can apply it to the chart and get into my positions for the Christmas period and hold my positions into the new year. And that's how I am approaching this week. So I won't be trading Monday or Tuesday. I will just be analysing the market, and what price is likely to do is create liquidity. Then on Wednesday, it will start to get into position for the interest rate release. And then that's when you get the confirmation on the direction that price is moving in. But by that time, I will already be into the positions. I'm hoping to get into the positions either the London opening on Wednesday or the New York session on Wednesday. So let's go to the technicals quickly. Then I'll go over some more and explain some more things. So daily time frame, get rid of the period separators. So if you're looking at the technicals, it's pretty simple. You've got a gap here, so you've got a support area. So what you'd be looking for is a clear continuation up from here, this grey area. If we start going up, then and you get a confirmation for more bullish movement on Wednesday and Thursday, then you're likely to go up, target this area, then the all-time high. Now, if price starts breaking down, the news is very bearish, then from this grey area here, you're looking for the downwards move, taking this liquidity, hitting this liquidity, which is I think it's a monthly opening gap or weekly opening. It's the weekly opening of the 18th of November, so that is liquidity, and we will be looking at the higher time frame, which is a move down to this grey area here. So those are the two target areas on the higher time frame, and that's what's likely to happen going into the new year. You either get a downwards move to target these areas and this grey area, or you're going to get that bullish support on Wednesday and Thursday with the news, and it's going to target this high and then the all-time high up here. That is very simple technicals to follow. So that is the actual plan, looking at the chart. Now, if we go over last year's Christmas period, that will explain exactly how we're looking at this this week, and it'll show you how you can position yourself. So what I need to do is just go to the 4 hour first, and just go all the way back. Where are we? Here we are. So here we are on the 4 hour. So this here is interest rate news. You got that big bullish movement. You can see before that they pushed price all the way down, created liquidity. Then we got a bullish setup there before the interest rate news. Interest rate news was released to the upside. Then we waited for GDP, which was on the 21st, which was here. And then that confirmed the continuation towards the upside. GDP was released, and when we got a continuation up all the way into the new year, which is here. So this was the new year opening. around here. You can see we've got that continuation towards the upside to follow those two main news events. But the difference between this price action and this year's is on this price action, interest rate news was on the 13th and GDP was on the 21st. But this year, you've got GDP 1 day after the interest rate news, which is on the Wednesday and Thursday this year. But to prepare ourselves and just understand how to get into these moves, we go down to the 1 hour time frame, and we're going to go all the way back to that period. And then we can really focus on what's happening. So here we have interest rate news. You can see interest rate news is released down here. We're going to zoom in on that. So here we have the Monday, the Tuesday, and then the Wednesday. And you can see how prices created liquidity on the Monday and Tuesday. You got clear liquidity here. You got a nice wick up here. And then on the Wednesday, around the London opening, you got pushed down to take that liquidity. Then you got the reversal, and London traders can get into the buy. New York session starts, and they start to retest that New York level, which runs along here, and that's the buying pressure for the interest rate news release. Now this shows you a clear bullish setup. Everyone is buying. So interest rate news comes out, and that's why you get that impulse move towards the upside. So that is the first entry setup with the interest rate news. Now we go sideways, and up until GDP, all you is getting is this consolidation sideways all the way to GDP, which is on around here. And you can see we've got the GDP release pushed up, comes down and retests that area a few times, and then you got the clear continuation towards the upside, and that continues all the way over the next few days and into the Christmas period. And that is what the sort of thing we are expecting this week on gold. So when we go to the 4 hour time frame and go back to current period, what we will be doing is analysing what price is doing over the next 2 days. Well, this is what I am doing. It's up to you what you do. I will be analysing price over the next 2 days. If we get a nice retracement up here, then that's very likely that we're going to get a nice bearish move, because that will be giving you a nice premium price for the interest rate news, and especially if it gives us that nice setup during the New York session on Wednesday. Now, if price starts to come down and starts to go sideways, building up support along here, then that's looking for more of a bullish outcome. But I will update you on the free Telegram channel, which is in the links below, around that time on Wednesday, in case it helps you. Obviously, in the VIP service, you get more updates throughout the day and throughout the week, but that's completely up to you. So that's what I'll be looking for, analysing over Monday and Tuesday. Then I'll be preparing myself and getting into the moves on Wednesday. So that will be the crucial day for me. And then Thursday, I will just be following on that move and just making sure price is following what I am predicting and what I am already in. And then once that has been confirmed, we can relax and just let those positions play out all the way into the Christmas period. So, yeah. There's no real weekly forecast. I've done a little technical on the screen. It's more of explaining how I'm preparing going into the Christmas period, and this is exactly what I'm doing. The technicals is quite easy. You got support along there. This is either a retest and a continuation up, or this is a liquidity grab and we're starting to get the downwards move to target this liquidity down here. It's quite plain and simple. Yeah, I'm going to leave it there. Links are in the video description. Message me if you've got any questions, and I'll update you on the free Telegram channel on Wednesday morning to let you know what I am up to and what I'm seeing.